Well, perhaps the most important investment principle is the concept of first principles, or as Socrates said, assume no knowledge. And of course, this is fundamental to learning anything. The only way to have any insight and to discover new knowledge is to assume no prior knowledge. You can build on prior knowledge, but there's a clear bias that we have certain assumptions that are inviolate, and therefore we have to take them as a given and therefore proceed from there. Well, this is a fundamental mistake, and certainly when it comes to maybe society in general, but definitely investing, this is a key mistake. So, for instance, when we look at first principles, we get back to asking the fundamental questions. And so when it comes to things like manufacturing and delivering products, right? So the first thing we thought about, in a great example in history, of course, is Ford and the assembly line. Now, of course, Henry Ford looked at what the meatpacking plants were doing in Chicago, and he realized that the assembly line, as it were, was a much more efficient way to produce something. And he realized, well, cutting up a carcass is no different than assembling an automobile, which is an interesting insight, but it came from questioning the very first thing. Well, how do we manufacture? And of course, when it comes to delivery, think about where we consume and why, right? And so when we think about consumers, we'd say, well, consumers go to a retail store to buy something. Really? It looks like consumers are very happy to have things delivered to them. And the insight that Amazon had was that I can deliver anything, and there's a level of convenience and a new infrastructure that if I take the current bricks and mortar retail distribution infrastructure as a given, I'll never have that insight, right? So they went back to their first principles about their industry. And a couple of examples, I love is writing in space. It's sort of an urban legend at this point, but NASA wanted to develop a pen that could write in space, and they spent $1 million doing this in the 1960s. Well, interestingly, it wasn't writing with a pen, it was writing. And so the Russians had a pencil, which could defy any of the limitations of zero gravity. And also, of course, we've got most recent examples when it comes to companies like Tesla and SpaceX, where the fundamental questions when it came to batteries, which is, well, here's what a battery costs. A lithium ion battery, this is what it costs. Well, no, it doesn't, because there's lithium, there's nickel, there's other materials. Well, what do those cost, right? And then you suddenly had a battery pack that went from $5 at basic cost, which made the car uneconomical, to now $1, which made that battery pack much more cost effective and made the difference in the pricing model to introduce a Tesla automobile that was affordable for at least some of the population. And of course, it's gotten famous about rockets, where 90% of the cost of a rocket is the actual frame of the rocket. It's not the fuel, right? The fuel just gets expended, but everyone assumed, well, you just shoot it up into space and it, is lost forever. Well, what if we brought it back down? Well, there's a question. What if we brought it back down? So a fundamental question is, what's really going on? Very few people ask this question, and it's a key to understanding any kind of insight. And fundamentally, it's the key to understanding all disruption. I mean, it's a term that's just tossed around maybe way too often. We're disrupting industries. Well, not really. But the only way you're going to have a sustainable disruption is to challenge first principles. Challenge, how do we do business, right? And one of the examples that I like to give is, if you had spoken to me in 2005 and said, I'm going to introduce a razor blade company that's going to compete with Gillette and Schick, you wouldn't stand a chance, right? Because everyone knows razor blades are bought in stores, and stores have shelf space and stocking fees and all those things, and a new company doesn't stand a chance. Well, it turns out with the internet and with the delivery system, you could be a brand new razor blade company like Dollar Shave Club or Harry's and suddenly have a presence in a market that competitively you wouldn't otherwise have had a chance if I accepted those first principles. And we're seeing this in all other industries. I mentioned, healthcare, we have telehealth, where now instead of me going to a doctor and waiting, much of what can be accomplished virtually at a great cost savings to both the consumers and the physicians. We're seeing, of course, in entertainment. Well, now I can have entertainment on demand. I can have content from various sources. I don't have to be structured to either going to a movie theater or sticking to a strict television schedule. The interesting thing about energy we're looking at alternative energy. But of course, alternative energy has many dimensions to them. One of the first principles about energy is that more than anything, energy is a networking problem. Energy is generated one place, but consumed in another place. So there's a way to look at energy, and especially alternative energy, as a new principle to understand how do we network different sources of energy to be more efficient. And of course, we mentioned automobiles in the Tesla. So now we have an entirely new different infrastructure. We have an entire new way of thinking about how cars will perform, the cost of ownership, and other things, and those dimensions change dramatically. But think about this. You had a brand new car company in Tesla taking a significant position in the automobile industry. The last time that happened was over 100 years ago. So people were saying there is no way a new car company can survive. It just hasn't happened. Well, it can survive if it goes back to its very first principle about, well, how are these cars even constructed, designed, and produce energy themselves? So there's a fundamental assumption that was otherwise thought of as truly an impossible and insurmountable industry to enter. And then finally, finance. Once again, global finance, you don't stand a chance if you want to be a new company. Well, now we have Robinhood, we have smartphones, we have a combination where now everyone has a trading floor in their pocket. So now we have a smart device that enables access to finance, and now finance can now be distributed with verifiable intellectual property on a blockchain platform. And suddenly now all the world has access to assets that are verifiable and traceable. And now we've got dramatic disruption that is just beginning. And all of that comes from questioning the very first principles. Like, this is how an industry is structured, but that doesn't mean that's how we should compete. And that gets to what I call the bad assumptions in financial markets, where people ignore these first principles. And so, as we talked about investing is thinking about how the future will develop, how things will unfold, but it really requires questioning everything. And that's when you get a bad assumption, when you don't do that. You know, I love to give the example of, Ptolemy versus Copernicus, right? So the Ptolemaic system, the first basic assumption is the Earth is the center of the solar system. And no matter what else happened, that had to be a given. Well, it wasn't a first principle. And so if you looked at the Ptolemaic structure, it's massively complex and, just unworkable, until finally Nicholas Copernicus came along and said, if we just sort of had the sun at the center, things change fundamentally. They're simpler, more easily explainable. And in fact, this is the fundamental principle that should actually be at work. And then we had Galileo came along and even questioned Copernicus's work and had a much more precise model of the solar system. And the thing that I love is saying, I call it the laws of physics don't apply here, where people look at financial markets as if it's something different. It doesn't have supply and demand that determine price in every other market. And I've read studies and I've seen academics publish things from fairly reputable universities, including, my former alma maters. And they've said, well, pricing mechanisms depend on all this knowledge, all this efficiency that's in the marketplace and all these systems. And so therefore, supply, demand, those imbalances, they just don't exist in any sustainable way in financial markets. And of course, this is nonsense, right? It's like saying, well, gravity works, but it just doesn't work here. It's not a universal law. Well, gravity is a universal law. There are some things like physics that apply everywhere. And price is determined by supply and demand. That is it. You can come up with some kind of efficient pricing model, but that isn't how price actually works, and all one has to do is spend maybe a week looking at financial markets to understand there's not a whole lot of rationality to this pricing. If something can drop 200 billion in value one day, like Facebook, maybe go up 200 billion in value the next day, like Amazon, which this happened just recently, maybe there's something else going on here. And it is those pricing mechanisms, right? And so you have an irrationality to pricing, right? And predictability of pricing is always uncertain. There is a long-term perspective about how value could be generated and how over the long term there is value, and that's why we say, have the fortitude to stick with your decisions, but don't think that's applying every day. And that's one of the really bad assumptions that we have in financial markets, is that any given day that price is efficient and therefore buying and selling is just fine. It's not. You lose money if you sell at the wrong time, for sure. Right? And so in closing, I'd like to talk about this. There's a great line from Galileo, right? where, just as I'm mentioning, you can talk about theories about efficient markets, which I don't believe in, right? Markets are fundamentally inefficient because how can you make money in a market if everything is efficiently priced today, right? Exchanging and pricing are based on supply and demand, which is based on human behavior, which is based on some fundamental irrationality. And the story goes, as Galileo, basically to save his neck, he sort of agreed with the Pope that the Earth was the center of the solar system, and the Earth didn't move, and all of that stuff. But as he's leaving, he says, it still moves, and that's the fundamental point. Believe all you want, shout and scream about efficiency, shout and scream about pricing mechanisms and discoverability, but things are still irrational. They are still based on human behavior. Supply and demand drive pricing, and fundamentally, it still moves.